Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that might make you wonder if they're trying to hide something or if they're just being overly complex. Let's decode this filing and see what secrets it holds. Before we jump in, if you enjoy breaking down complex corporate filings into simple, actionable insights, hit that subscribe button. We also have a fantastic community on Discord, linked in the description below, where we discuss these things further. Alright, let's get right into what AB Private Lending Fund, or just the fund as they call it, has been up to. It looks like they've been busy selling shares, but not in a way that requires them to register with the big watchdogs like the SEC. So, back on the 3rd of November, they sold over 147,000 Class I shares, and the final count was confirmed on the 20th of November. They raked in a cool $3.7 million from this deal. This was all done through what they're calling the private offering, which basically means they sold these shares directly to a select group, likely other investment funds, without a public sale. They're saying this is allowed under special rules that exempt them from the usual registration process, citing Section 4, A2 and Regulation S. Now, let's talk about distributions. On the 20th of November, the fund announced payouts for its shareholders. For Class I shares holders, they declared a gross distribution of $0.18 per S-share. What is interesting here is that the shareholder servicing and distribution fee was zero, meaning the full $0.18 made it to the shareholders' net of fees. However, for Class S and Class D shares, it seems like there were no distributions declared, shown here as ANA, or not applicable. These distributions are going out to shareholders who held shares by the end of November, with payments expected around the end of December. Shareholders can choose to receive this cash or reinvest it back into more shares of the fund. Moving on to the fund's value as of the 31st October of last year, the net asset value, or NAV, is a key number that tells you what each share is worth. For Class I shares, the NAV was $25.29. For Class S and Class D shares, the filing shows a dash, indicating no specific NAV was reported for these classes, likely because they weren't active or had zero value at that time. Overall, as of that same date, the fund's total NAV was about $156.3 million. They also reported the fair value of their investment portfolio at a much higher $315.3 million. This difference between the NAV and the portfolio's fair value is a common thing in investment funds and can reflect various accounting or valuation methods. They also had about $159 million in debt outstanding. Let's look at the bigger picture of their sales. The fund is openly selling shares, aiming for up to $1 billion through what they call the offering. On top of that, they've been selling these unregistered Class I shares as part of that private offering we talked about earlier. As of the date of this report, the total shares issued from both the public offering and the private offering, excluding shares bought through reinvestments, shows a massive 6,303,986.55 Class I shares from the private offering alone, bringing in a significant $158,121,896.55. It is interesting that there are no shares listed for the public offering Classes S or D, which suggests the focus has been heavily on the private placement of Class I shares. Now let's put on our Warren Buffett hat and think about what this all means. The fund is clearly generating a lot of activity through its private placements, bringing in over $158 million. This suggests strong demand from sophisticated investors who likely see value in the fund's strategy. The declared distributions for Class I shares, especially with zero fees, is a positive sign for those investors, showing the fund is returning value. However, the absence of reported NAV for Class S and Class D shares, along with no mention of sales in the public offering for these classes, might signal that these share classes are either not performing as well or are not the current focus of the fund's capital raising efforts. The significant difference between the portfolio's fair value and the aggregate NAV also warrants attention. It could be a sign of how the fund values its illiquid assets or a strategic decision in managing its balance sheet. One notable risk is the reliance on private placements. While exempt from registration, it means less transparency for the average investor. The fund's strategy appears to be heavily weighted towards attracting large private investors, and the success of the fund will depend on its ability to continue doing so and to effectively manage its portfolio to generate returns that justify these private investments. A key opportunity lies in their ability to scale their private offering business and potentially expand into the public offering if conditions are favorable, and if they can build momentum for their other share classes. In conclusion, AB Private Lending Fund is actively raising capital, primarily through private channels for its Class I shares, and showing a commitment to returning value to those shareholders. The lack of activity and reporting for other share classes is something to keep an eye on. Alright, that is our breakdown of AB Private Lending Fund. What is your take on these private placements and the fund's strategy? Drop your thoughts in the comments below. If you found this analysis helpful, please smash that like button and subscribe for more deep dives into company filings. And don't forget to join our Discord community for more exclusive content and discussions. Thanks for watching, and we'll see you in the next Decode.